Hello everyone and welcome to another edition of the Forex Market Update. Today is July 2nd, 2014. We see this morning that the market is pretty negative in terms of the Euro-USD pair. We see that the US dollar is gaining on the day on the euro pretty significantly and is currently trading at 136.44 or so. To just see what's happening in the currencies, let's just take a top-down approach. This is the daily chart of the Euro-USD, and going back from about July 2012, we see that this market is in a broad uptrend. You can see a series of higher highs and higher lows, higher highs, higher lows. So the market is in a broad uptrend on the daily chart. We recently had a pullback from a high of just shy of 140 down to 135 or so. But the market seems to be trying to turn around and trade higher. This level here at 136.50 was pretty significant, and as we can see, the market closed above that 136.50 level. Taking a look at the 4-hour chart, we see that we had resistance up here at 136.50, and the market managed to trade above the 136.50. So we're currently in an uptrend on the daily chart, and the market looks to be starting another uptrend on the hourly chart. This is the 4-hour chart, and the 60-minute chart. The market is clearly in an uptrend, and an uptrend is, you can see an uptrend by a series of higher highs and higher lows, higher highs, higher lows. That's the definition of a uptrend. So in this market environment, I would be looking to buy the dips in this uptrend. This morning we see that the market is currently dipping down from the weekly R2 number, and these pivot points are very important when you are trading, because they can define the range of the week. And this weekly R2, the market stopped exactly at the weekly R2 and is pulling back. So for you swing traders out there, this may be a good opportunity to buy this market when you get a buy signal. So that's what's happening in the euro currency. Another market of interest that I want to mention is the British pound. And for those who have been following these market updates, know that the British pound was in a triangle, as I drew here. Pretty huge triangle on the weekly chart, and this triangle dated from mid-2009 till 2014, where we were able to break out of the triangle in late 2013 into 2014, and the market is steadily trending upward from the break of the triangle. Now, an area of resistance that we were keeping an eye out on was this level here at 170. Let me just draw a red line here. This was a previous high right here, and this high was at 170.43. So the market came up, and as you can see, in around April or so, traded up to the resistance line here and pulled back slightly. And now what we're seeing is that the market is closing, or trying to close, above that 170.43 level. So for the week, we have to wait until the week ends. But if the market does close above this red line, previous high, that is a good indication that the bull market in the British pound will continue. So That's what we're keeping an eye out on for this week, to see if this market closes. And then next week, we are going to see if the market retests this area of resistance, because resistance normally turns support. If it retests it, if it holds, and then continues upward. So this area will be very interesting over the next couple of weeks to see if the British pound continues its upward trajectory. Okay, taking a look at the US dollar index, we see that the market is moving down nicely, and the area of support that is of interest on the US dollar index is this area at 79. And as you can see, the $79 area was touched a couple of times over the last couple of years. In 2012, market found support 1, 2, 3, 4, 5. Let's not count that one, but 6 times the market found support at 79 and has bounced. So what we're looking for is to see if this 79 level will be breached if the market trades down to that level on the US dollar index. So that is very important. If the $79 level ends up being breached, what we may have is see a huge decline in the US dollar if this market level is breached. Taking a look at gold, we can see that the market is currently in no man's land. We had a triangle consolidation here between April and May. The market broke below the triangular consolidation and traded up, and is currently in no man's land. So my view on gold now is pretty neutral until this triangle that you see here is resolved. Now, what we want to see, or what the bulls would like to see, is the market trade above 2 important points: the $1,400 level and this point just below 1450. This is about 1440. If the market can turn around and close above these levels, that would signify that we could be on the path for another huge gain in gold. On the other hand, if the market trades down, comes up, trades down, and breaches this $1,200 level, we could see further weakness in gold. So these are your 2 points: 1200, well, this is 1150 and about 1450. Until then, I will just allow the market to resolve itself, really. And remember, how we trade is that we allow the market to show us what it's doing, as opposed to trying to guess the direction. I always get queries about the stock market. The stock market, this is S&P 500, ETF, SPY. We see that we are still in a broad uptrend, and one of the things I always say is do not fight an uptrend and try and short this market. The market is currently in an uptrend, so if you are long, just stay long for now, and don't be short. Don't try and pick the top in this market, because over the last couple of years, trying to pick the top in this market was a futile effort. Okay, I'll have more at the end of the week. Remember, we're keeping an eye out on the British pound to see if it trades above that important 170.50 level. I hope you enjoyed this video. This is Beyond. Thank you very much for listening.